great to see you. Thanks for coming to our studio. Can you just start by introducing yourself and what you do?
Jim Marous, I'm the co-publisher of the Financial Brand, the owner and CEO of the Digital Banking Report, and I'm also the host of the Banking Transformed podcast. Been doing this for a while.
Love it. And we're here at Fintech Meetup. How's it going so far? What's standing out for you? Any keynote speeches, trends, topics?
Yeah, it was interesting because I came here to kind of see what Fintech Meetup was. Missed last year, came in this year, to be here, and then I was partnering with the group here to had a panel discussion earlier this morning. But I was trying to see how this is working, and more so now to see, given all the changes in the marketplace over the last 10 days, what has been the impact on the fintech marketplace overall. And I'm pleased to see what the events have been. Very organized, very structured, very, where you have to be at every moment. A very interesting platform.
And can you expand on exactly that? So we are here in America, interesting times. All the banks are making headline news. What are your thoughts on what's going on and how it will affect the fintech industry?
Well, the same way that I probably couldn't predict what was going to happen 10 days ago or 2 weeks ago, I can't predict what's going to probably happen right now, 2 weeks or 2 years from now. That said, I think the energy level in the marketplace now that everybody's paycheck is going to be paid is more vibrant. I had a panel this morning with 3 major US banks. I asked them the question, there's a concern in my mind and other people's minds about how the Silicon Valley Bank collapse would impact the desire to invest in fintech firms, the desire to invest in technology firms, the desire to invest in startups, given interest rate rises, getting less fintech or VC funding. What would the impact be? All 3 banks point blank said, if anything is going to ramp up our desire to innovate and use fintech and third-party partnerships to drive scale and speed. But what was interesting is I realized that all 3 of these financial institutions already had the leadership that believed they had to do something different. And so I came away from that, and then I told the audience, I said, listen to this. You may use the excuse, oh, those are the big banks, they can do that. The reality is every size financial institution has to continue to innovate, has to continue to collaborate and partner, and have to continue to move forward as opposed to using Silicon Valley Bank and other things as an excuse. As bankers, I'm a traditional banker, legacy banker. As bankers, we don't like change. In fact, we don't like change. But more importantly, as bankers, we tend to look for those excuses sometimes not to move forward than for the reason to move forward. One of the 3 banks, Huntington Bank, said, I'm actually going to double down on finding fintech companies that I might be able to invest in or buy. That's a really good mindset in this marketplace, going counter-cyclical. I don't think there's anybody that can predict what the future is going to bring, but I can tell you that it's going to be more important than ever for fintech firms to drive revenue positive as opposed to this growth positive. We have had some interviews with fintech firms that say, in the past we were wanting to get as many customers as possible. We think we have to refocus on saying, how can we hit revenue positive as quickly as possible so we're not as reliant on outside sources.
And given your umbrella overview of the financial sector and the fintech sector, which companies are really standing out right now? Or if you can't be so specific, which sectors in particular are really getting it right?
Interesting question. I think Plaid is a really good example. They continue to challenge themselves to move forward. I think some of the legacy fintech players in the States for sure, but I think globally, the ones that have already become revenue positive, they have a business model that have checked the box as far as if you're a banking organization, are we really acting like a bank or are we simply acting like a tech firm and not really understanding banking? Those are going to be challenging. I think overall though, I think fintech providers that are going to be the best are going to be those organizations that can bring a solution to a financial institution quicker and more seamlessly than any others. If you go around the floor today, you're going to still hear a lot of elevator speeches that are going to sound very similar. Their vision as what they want to achieve. I think financial services providers, third-party providers, fintech firms, have to segment their solution to say, how can we bring the lowest hanging fruit to the marketplace the quickest, build a relationship with a financial institution, a bank or credit union, or any other organization, faster and at scale, so I can be a partner with them and then expand the marketplace. I think too many organizations try to sell the global solution without realizing that the buyers are looking for a solution to a specific problem that can be implemented as quickly as possible.
And looking ahead, what do you think the fintech industry here in the US particularly is going to look like in the next 5 years, let's say?
I think it's going to mirror what's going to happen in the banking industry overall. I think we're going to end up with fewer players that are more successful. I think it's been when there was 0% cost of money, anybody could get in, get funding, move forward, but not everyone was a good business. I think the same thing is said for banking. There's organizations in the banking world right now that are simply treading water and being a laggard or a fast follower. It's not good enough anymore. Unless you're a leader, you're not going to do well. And I think you're going to see significant consolidation, especially because if you look around beyond the walls here this week, you're going to find a lot of solutions that are very similar. It's who's going to be able to bring it to scalability, who's going to have a bigger marketplace, a bigger customer base, a solution that's actually differentiated in a way that can bring value to the proposition.
And are the bigger US banks cooperating and partnering and collaborating with these up-and-coming fintechs?
They are, and I think what's interesting is many people thought for a long time that the bigger ones will build it as opposed to buy. The bigger organizations are finding out that they can partner also for speed and scale. I had Wells Fargo and Citibank on my panel this morning, and they also said, we continue to move forward trying to find good partners because we realize our people can't bring it online as fast, they can't scale it as fast, and more importantly, they're not committed to the ongoing improvement that a lot of the fintech firms can do. The smaller and mid-sized organizations, the technology that's being able to be provided today is being provided at a cost that's very valuable for the smaller organizations. So your small and mid-sized organization, they can innovate faster because they're more willing to make that partnership work because they don't have the people on staff. That's a way to take care of the talent shortage and everything else. So it's a great marketplace for fintech firms if you stick to the knitting and become a good business as well as a good solution.